In this video, I'm going to explain what an agreement in principle is. Let's grab a coffee and get right into it. An agreement in principle may also be known as a mortgage in principle or decision in principle. It's essentially an indication from the lender, for example the bank, of how much they could lend to you to buy property. The decision will be a specific amount of money and will be based on the information that you told them about your spending, debts and income. For example, some lenders won't lend to you if your income is below, say, £25,000. Other things likely to reduce the amount that you can borrow are large loans like car payments. The amount that you pay each year for these loans is essentially deducted from your salary. This is because they reduce your ability to pay back the mortgage by that amount each month. For example, if you had a car loan of £100 a month, then this would essentially reduce your annual income by £1,200 per year. And depending on your income, this may be the difference between securing a mortgage or not. So if you're thinking about getting a mortgage soon, then I would definitely say think very carefully about taking out any large loans in the meantime. So how much are you likely to be able to borrow? Well, the normal range that a bank is likely to lend you is between 3 and 4.5 times your pre-tax income. And if there are two applicants, for example a couple, then the amount that you can borrow will be based on both of the applicants' combined income. So let's give a quick example. If your salary is £25,000, then you will likely be able to borrow up to between £75,000 and £112,500. But if you and another applicant were to apply, and both of your salaries were £25,000, then you'll be able to borrow between £150,000 and £225,000. The final point to make is that the AIP only represents the amount of money the bank is willing to lend to you. So this doesn't exactly represent the amount of money that you could budget to spend on a home. You must also consider the deposit that you can afford. Many banks currently require at least a 15% deposit. However, you might find that some will offer 10% deposits for first-time buyers. So if the deposit is 15%, the agreement in principle outlines the maximum amount they will lend to you to make up the other 85% of the property purchase price. So to go back to the previous example, if you earn £25,000, then the bank may be willing to lend you up to £112,500. This means you could purchase a property for just over £132,000. However, this would require you to have a deposit at 15% or just under £20,000. But let's say you only have a deposit of £15,000. Now, even though the bank was willing to lend you £112,500, if you're required to have a 15% deposit, then this means you could only buy a house worth up to £100,000, and the bank would actually only be willing to lend you £85,000. I hope you've learned something from this video, and I hope I've answered your question. However, if you do have any other additional questions, then please put them in the comment section below. And lastly, if you've enjoyed this video, then please hit the like button and don't forget to subscribe because there are plenty more videos to come. Thanks for watching.